Okay, Dahlia's unmuted me, so I guess that's my sign to start. Welcome everyone. It's really I like these quarterly calls are really one of my favorite events because I get to meet and like see some of the faces of my copiers, which sometimes can be a bit of a one-sided affair. And I was really excited to invite everyone this time around. So yeah, thank you so much for joining. Some of the content will be familiar to those of you who have been to one of these calls before, but because I have so many new copiers who have joined me over the last few months, I thought, yeah, it would be useful to introduce myself and give a bit of a background about myself. So I apologize for those of you that have heard this before. Oh, let me just unpause myself. So one of the things I promised you when we met back in February was to have different channels for copiers to reach out to me. And hopefully by now, all of you have come across my website. Some of you have reached out to me on Twitter, Instagram. Thank you so much for getting in touch. Of course, the next step for me now is to reply to all of those in a timely manner. And I am working through them myself, so I do apologize if there's a bit of a delay, but I will get back to all of you. So today we're going to be giving a quarterly update for the first quarter of the year. So basically, since we last met, like at the end of January to about April time. But before I do that, I'll just quickly give a brief introduction to the person behind. Oh, I've even spelled my name wrong on that, my username wrong on there. I just noticed. Sorry. Of course, you all know me as Rubymza. So I am originally from South Africa, and I've always been a really big nerd. I studied mechatronics engineering because I was obsessed with robots, and then did a master's in a dual program with the MIT Media Lab in innovation. And following that, I came to the UK in 2013 as a Rhodes Scholar, where I studied at the University of Oxford. I did a master's in biomedical engineering because I was really interested in medical device design, and then followed that with an MBA because I always had some interest in the business side of things. I then left the UK and moved to Kenya, specifically in East Africa, where I worked for a startup. I lived there for nearly 2 years. And I was also a data science consultant for a number of startups in the region, including a large scale rollout of an app for Microsoft Garage. And my master's project led to a patent and some subsequent funding. So I got a call from the University of Oxford to offer me a position to do a PhD, which was fully funded. And I never thought I would be an academic, but I did complete the PhD. I hold 2 patents from that and a number of academic publications. And you'll see that I'm still very much involved in research. I'm also fortunate to have received a number of multiple awards. Most of them are related to AI and technology, specifically the use of AI in very frugal setups. So I typically, as I mentioned, I've worked in Kenya, I'm from South Africa. I now work in Vietnam as well as India on some of my projects. And it's really just because I like the challenge of applying technology in limited resource settings. I like having to think outside the box. And so I've naturally gravitated towards working on really complex projects, but that's been really rewarding. And of course, I'm also dog mother to Pepper, who some of you may have seen on my website as well. She's in the photo here. So I'm very open about the fact that I am not a full-time popular investor on eToro. In fact, I have a full-time career as a research fellow at the University of Oxford in the computational health informatics lab, where I hold these patents as the co-inventor of the Oxford Smart Hand Pump. And I'm now leading our global health theme on using AI to monitor patient deterioration. As I said, working largely in Vietnam and India, and of course, recently focusing very much on COVID-19 for some of our applications. I'm also an executive board member of an Australian startup called MyRaphael, which is doing something similar. They're using wearables to monitor COVID-19. And then I also serve as a Enterprise and Innovation Fellow at the University of Oxford, where, given my experience in both in research and in industry, I'm helping to translate some of those ideas out of the university into industry. And in all of this, I'm quite fortunate to work with my partner, Dr. Ravi Patnasetti, who's in the photo here. And he's a clinician, and he also does crypto trading. So we have a lot of dinner conversations about, nonstop about AI, healthcare, and nowadays cryptos, as that's his new passion. So just to point out to you quickly that eToro makes a fact sheet for all of its popular investors. It's on my eToro page, but I've also put the URL down here. It gets updated at the end of every month, and all of the PIs should now be sharing theirs with you. And I would really encourage you to take the time to kind of explore these, because I think they're a really powerful tool to help copiers assess how PIs are doing. And especially the statistics down here, which I've highlighted, are quite useful if you take some time to understand them, and kind of help you assess whether a certain popular investor is suitable for what you're interested in achieving. So you'll see that for mine, for instance, I have a fairly low maximum drawdown. 16% is quite a low drawdown in terms of drawdowns. So, and I have a very low standard deviation in the kind of fluctuations in my portfolio. And so that very much speaks to also what my strategy is, to have consistently moderate returns over a long period. So if you're expecting to, make a lot of money very quickly, or to see really high fluctuations, of course, we're currently in a very volatile time, but my portfolio tends to be a bit more stable in its performance, and I try to keep it as uncorrelated to the S&P as I can. So just some high-level updates. With all the wonderful new copiers, those who were on this call in February, you'll remember it was just after I became Elite Pro, and I was really excited. I've since grown my AUM, or the assets under management, the amount that people copy me with, from 20 million to 30 million at the end of March. I still have about 20,000 copiers. That's remained consistent, which is quite interesting, because a lot of people, when they see a little bit of profits, they just withdraw and leave, which is a shame, because this is a long-term portfolio. But I've been a popular investor for 2 years now, and sometimes just the same way you investigate my portfolio, I will have a little bit of a look around my copiers and see what's going on in their portfolios. And it's always nice. I have been a popular investor since 2018, and sometimes I find people who have been copying me consistently since then. It's a bit annoying when their portfolios are doing better than mine because of the time they started copying me. But yeah, it's always nice to see those people. Okay, some people are saying about the sound, but hopefully it's sorted now, because yeah, sorry, I'm just keeping an eye on the chat. So yeah, this is just my high-level overview. Because of the rapid expansion in my portfolio, I've been doing a lot of media interviews, which I keep sharing with you, including this one from the Financial Intelligence, which is a Romanian a website, which I shared just this morning. So I just told you I'm an engineer. So how did I end up being involved in the finance? So I always say, I really think my mother should have written a book called Budgeting and Investing for Babies, because 2 days after I was born, she had gone to open a savings account in my name. And every little bit of money that came as a birthday gift or any saving, I had to save. And then when I got to primary school, I had to set up a budget for myself, which I had to submit to my parents. And I had to buy my own clothes and, toiletries and everything in this budget. So it meant that my pocket money was a bit more than my friends, but I had to look after these other expenses. And every month I had to submit an income and expenses sheet in order to get the next month's pocket money. And although it was really frustrating as a child to have to do that, I very quickly figured out that if I skimmed on some parts of the budget, so if I made that toothpaste last a little bit longer, it meant that I could, use that part of the budget for other things, which was actually a really useful lesson in hindsight. And so I started investing in the stock market specifically around 2009. And again, I remember very vividly that I had a very prolonged negotiation with my then stockbroker, because he was charging me 2%, and I was trying to negotiate him down by 0.5% to 1.5%. And my family and friends all thought I was crazy, that I was so obsessed about this 0.5% fee that I was being charged. And I wish I had the calculations, which I did, but I just remember showing them that, by the time I'm 70, this is the amount that I'm going to pay in this 0.5%. And I was absolutely appalled. I did refuse. He finally gave in, I think probably just because I was so persistent. But yeah, I finally joined eToro in 2016. And if you have been following me for some time now, you'll know that I started with day trading in oil, which you could probably see from, the beginning of my portfolio here was a very steep downward learning curve, which I'm very grateful for that painful experience, because it has made me the disciplined and patient trader that I am today, or investor rather. So I'm currently one of eToro's most copied popular investor, and this is really, I think, testament to both the expansion of eToro's massive growth, but then also I regularly get asked, what's it like? Do you feel a lot of pressure having this many copiers? And I actually take the same amount of responsibility whether I have one person's money or 20,000 people who are copying me. But I think what's been really valuable since I've become a popular investor is just applying more discipline and more patience, and now being held accountable by all of you to that strategy. And also one thing I've had to, really learn and get a lot better at is communicating that thought process with other people. And you can really see on the
You're muted, Heloise.
there, I think I got muted. Okay. Yeah, so you can really see from 2019, I think my overall strategy has benefited massively from being a popular investor and having the sense of accountability. So what is my strategy that I have in my portfolio? So it's predominantly a long-term stock portfolio, and I have a good mix of value and growth stocks, which I identify with fundamental analysis. I tend to keep the portfolio quite balanced, diversifying it across different industries and regions, but also more recently across different asset classes. And as I mentioned before, I typically use machine learning or AI as part of my technical analysis to identify some of my entry and exit points for the stocks or companies that I identify. I aim to hold a low to medium risk score. So on eToro, that's 3 to 4, although over the last year, I've been averaging about 5 with all of the volatility that's been going on in the stock market. And as I mentioned, I hedge other asset classes. I almost never use leverage. And that means that I have able to maintain a really low drawdown. So those of you who sometimes ask me about setting a stop loss, I don't necessarily always recommend that because my lifetime maximum drawdown on eToro is 16%, which is a really small drawdown to tolerate in any kind of stock market portfolio. And I also tend to have very low or no fees because I'm not using a lot of leverage. And for my analysis, one of the things I talk quite openly about, and I was actually quoted in the Bloomberg for calling it this, is that I use the social trading platforms as a kind of hive mind analysis to pick up on the very long-term cultural trends that we can expect to see in the long-term horizon, which is a data point that we didn't previously have. And then, of course, there's also keeping an eye on politics and macroeconomics, which you guys would have seen if you see my updates. Sorry, I was just looking at the question. Somebody said that I do use leverage. You're right. I probably shouldn't say I never use leverage. I very rarely use leverage, and I tend to I haven't used it a lot recently, so just to correct that. So how has the portfolio been doing over the last 4 years? I use the S&P 500 as my benchmark, and over the last 4 years, since I've been on eToro, I take the kind of privilege to discount those first 6 months of learning which I have, although my statistics are there on the platform. Over the last 4 years, the S&P 500 has given a 16% annual return, whereas my portfolio has given a 27% portfolio return. So that's quite a good, consistent outperforming of my benchmark, and one which I'm committed to maintain going forward as well. So how has the portfolio been doing this year? So the S&P 500, when I checked this morning, was at 11.5%. We are at 14.2%, so just inching ahead. It's been a really, really tough quarter for many reasons, which I'll delve into a bit. But overall, I'm just really relieved and happy with the performance so far, and we are ahead of our benchmark, and it's a really good start to the year so far. So let's delve into some of the things which happened. As I said, it was a really tough quarter. If I have to be honest, I think it was probably one of my toughest quarters on eToro, partly because of having so many copiers who very rightly question me, but at the same time, the markets have also been really volatile and kind of unconventional. So it's really kept all of us, I think, on our toes. But overall, I think I have managed to outperform a lot of the major indices, so I'm really happy with it. But I will take a moment to just reflect on what happened. So if you've been following my updates, you would have seen that I've written a lot about the bond yields and the inflation concerns that have been ongoing, and I think will be continuing for a long time to come. I've actually just recently did a Bloomberg commentary on the generational awareness of potential hyperinflation, and I'll share that with you once it is out. So of course, right in the beginning of the year, wow, it feels like an eternity ago now, but in the beginning of the year, we had the meme stock rallies, the Wall Street bets, and of course, the rise of the retail investor, which is why you're all here and eToro has seen this massive growth. I didn't really participate in any of the meme stocks, although I did follow a lot of it, but yeah, I didn't take advantage of any of those just because I didn't feel that it fits in with my portfolio strategy. Of course, then also we saw the markets rotate a lot during the earnings, which kept a lot of us up in March. You can see a big downturn in the beginning of March. Overall, I'd say the West has shifted away from China a bit. So despite having potentially being the only country who had growth last year, China as a whole has seen some really bearish markets this year. And of course, there's been the ongoing political and COVID instability, as we've seen a lot of countries, including the UK, where I am, extending some of the lockdowns, which I think a lot of people were obviously hoping that we would leave, COVID would be something of 2020. But yeah, as I said, overall, we have outperformed the market, and we'll just look at a few more specific highlights of nice trades I had during this year. So I think one I would definitely talk about right away, and something I mentioned when we met last time, was the introduction of cryptos into my portfolio. It's something which I didn't have in the portfolio since 2017, which meant that I missed a lot of the crash of 2018, but I have reintroduced them at the end of last year for a number of reasons. Firstly, being that the cryptos are highly uncorrelated, or used to be, I think it's starting to change, are quite uncorrelated to the S&P 500. And so they are quite a nice buffer to use, or a hedge to use against all the volatility. And also we have been seeing a bit of a crypto bull run since the end of last year. So those two things combined makes it a lower risk strategy as a hedge for the volatility in the portfolio that I'm managing. So you would mostly see Bitcoin and Ethereum. I am quite a firm supporter of Ethereum. I like a lot of the underlying blockchain that they have set up. And I think, Ethereum is having a good day today, but I think in a lot of applications, people are starting to realize the application of blockchain, which goes beyond using cryptos as a cryptocurrency, which was the most obvious first use to introduce something like this into society. And then some of the other sectors which I have traded or like trading or had good trades on in the last quarter was the banking sector. So JP Morgan and Citibank, they were a bit positions which I opened at the end of last year, thinking that they'll be pushing a lot of products into the market once stimulus ends. They didn't do quite as well as I thought, but I was happy with them. But I have taken them out of the portfolio for now. And then I did manage to squeeze out some last growth out of some of the payment platforms, which I think was still a bit of a legacy effect from all the online and retail shift that we saw in the last year. And I think when we're talking about highlights, I should probably talk about some of the things which hurt the portfolio as well. And I think I made one very glaring mistake, which some of you did question me on very regularly, and that was holding on to VXX for too long. I have closed it now, which I sold off after the reverse split has happened, and it was fortunately a really small part of the portfolio, so it didn't have a very big impact on the overall portfolio. But yeah, I do wish that I had closed it sooner. So with that in the rear view mirror, let's have a look at what I'm forecasting for the next quarter. So I always think it's good to take a dual view and then kind of prepare for both scenarios. So if we look at the optimistic or kind of positive outlook for the next bit going forward, vaccine rollouts overall are going well, although they're better in some countries than others. But we are seeing some economies reopening, including the UK, and that is giving a lot of promise for relief for the hospitality and entertainment sector specifically. The UK, I recently wrote about the UK updating the traffic light system for international travel, which in the UK is bound to open in mid-May. Yeah, I'm not overly optimistic about this because I think beyond the cost of restarting travel, there's obviously the cost of testing for the systems that have been proposed so far, or the cost to the traveler for isolating, especially if it's a hotel quarantine. So yeah, that'll be interesting to see what happens once travel starts to reopen at a larger scale. Um, if we have a bit more positive outlook, again, I don't think there's no longer a question about whether we're going to have inflation or not. With all the stimulus which has been pumped into the global economy, we should expect inflation. And in a positive outlook, we would probably see that increasing at a moderate or kind of expected pace. As I mentioned, there's been a slight shift away from China, and a lot of countries, especially the US and UK, are looking inward to stimulate local manufacturing, which will be really good for local economies. And I have started introducing some of the specific UK ones into our portfolio over the last 4 to 6 months now. And I'm ever the optimist. So I say new normal equals new opportunities, new innovation, and yeah, hopefully the market will see it in the same way. In a more positive, negative outlook or a pessimistic outlook, of course, we are all following the devastating news in India and some second wave in Japan. So the constant threat of new or uncertain viruses, are keeping governments globally aware that perhaps the vaccine, was not the exit strategy that they were hoping for. And that's certainly the view that I've had all along. I mean, it is a vaccine, it is a viral infection all along. So I think we never really even figured out the influenza vaccine. So it'll be interesting to see how this one plays out. And I think by now, all of us know someone who's had the vaccine and then tested positive. So that's a slightly more pessimistic outlook going forward, which will mean that the recovery will be a lot slower for some sectors. It might be this continuous start-stop that we've been seeing, especially in the UK. Definitely interest rates will increase. Inflation will be a lot faster, or even, yeah, some people are talking about hyperinflation, which will of course lead to high unemployment, layoffs, businesses going under, some of which we've already seen during the first lockdowns, but yeah, at a much bigger scale. And yeah, overall, we'll just anticipate to see the true impact of the pandemic once all the stimulus packages ended. So the pessimist might say that we're in a bubble and that we're due for a correction or a collapse. And so how am I kind of preparing for this going forward? Well, one is I think we're all adjusting to the new normal. We're all kind of keeping an eye out for what are the undervalued stocks and what are the trends that are changing. And one of the things that I've been specifically doing is that you may have seen, and some of you have asked me about it, is consolidating my profits a lot more regularly than I used to. And that's just something that I'm doing because one is we're getting the benefit of compound interest. The market is quite volatile, which means I sometimes hit my profit goals a lot faster than I did previously. So we're seeing a lot of market movements. And so I'm just constantly kind of circulating these. Some of you are asking sometimes, why do I close something and immediately open it again? Purely because if I do believe in that stock for the long term, I'm not taking the profit out because I don't want to be invested in that stock any longer. I'm simply consolidating the profits, and I don't truly believe in timing the market. So rather than taking them out and waiting too long for an entry point, I would just rather reinvest the profits right away. And of course, also the second thing that I'm doing is keeping a healthy cash reserve. So one thing I used to do before I became a popular investor, or before I had such a large number of copiers, was I was very diligent and disciplined in depositing funds into my portfolio every month, which was partly how I grew my portfolio over the years. I did stop doing that because I wanted to give all the new copiers time to catch up. And I recently added some funds. So it is something that I will give you a heads up warning that I'm going to start reintroducing, adding those deposits. And I think I did it recently. A combination of things went wrong. So I will be better at kind of giving fair warning in advance, but I think you can expect me to add some deposits, usually less than 5% of the overall portfolio around the beginning of each month is, I think, just overall a good habit. If you're able to do the same, that's great. If you're not able to do the same, don't worry about it. I think the most important thing is just that I'm not adding the funds for anything specific. I'm just holding them in case something comes up. So yeah, my portfolio has remained net long for the whole recovery period since last March, and I've kept it quite diversified, more diversified than it's ever have been. And I anticipate to keep that for the rest of this year at least. And then, of course, if you have heard anything from me, it would be that you can expect me to be disciplined and patient. Those are my two favorite words. And then if we just take a bit of a zoom out a bit and look a bit longer term, in the immediate term, I think we could expect a bit more of the online world transition and everything behind that to see some immediate winners and some, hospitality industry recovering as economies reopen. In the longer term, I'll continue to look for undervalued stocks. And, they always say it's best to stick to what you're good at. For me, that is healthcare and understanding the role of AI in that. So I am a bit biased when I say that I'm very optimistic about the adoption and application of technology in the long term. I think healthcare systems around the world are currently still in firefighting mode, with the pandemic being in different phases in different places. But if one thing has been a positive outcome of the pandemic is that I now more and more see clinicians and engineers talking the same language about the potential of adopting technology solutions to make systems more robust going forward. And some key innovation trends which I am looking out for, of course, there's a lot of buzz around solar, EVs, driverless cars. There'll be some of the direct impacts, which are not necessarily the ones that I'll be looking out for. I think what I usually look out for are the more indirect ones. So for example, if driverless cars were to become mainstream, what are we going to do with all the time that we have available from the person who was previously driving the car? Like, what are the business models that are available for, capturing that audience? And then the second one, which probably links to my view on healthcare, is biotechs. I think there's a lot of solutions, at least, in Oxford, where the research is ready to be translated to the consumer. And I'm really hoping that we will see some of those things coming out through this year. So I've just been talking at you for a really long time. So I'm gonna stop there and take some questions in the chat.